Most investors follow trends. Very few develop edge. This show focuses on something different: how serious operators build durable wealth in overlooked niches, starting with mobile home parks. We'll break down the strategy, underwriting, discipline, talk about the roadblocks, and the operational execution that'll make your capital aligned with long term returns. This isn't about chasing deals. It's about thinking like an allocator and executing like an operator. This is the Mobile Home Park Exchange. So I see this all the time in real estate, especially from real estate agents. They get into the business and all of a sudden they start making money and they've got deals going on, but they're not actually in the real estate business. They're just getting paid. And we have a guest today that he's built a team, he's done deals, he owns real estate. He's actually built a real estate business, and he owns parks, and he's made that pivot into the manufactured housing space, and he's got an incredibly interesting story on his evolution. I'm pleased to welcome Jordan Moorhead from Keller Williams Teams, and is really a superstar agent in Austin, Texas. How are you doing today, Jordan?
Doing great, Frank. How about yourself?
I'm doing very well, and I'm very pleased to have you on the program. I know that we had our teams have been going back and forth and trying to get this scheduled. And one of the things that always fascinates me, because of my, how I got into the real estate business and the pathway through being a real estate agent and then and having a real estate brokerage business, I love having the conversations with agents about their pathway in and how not to get caught in, we'll call it the agent cash flow trap, right? Mm-hmm. And you kind of took a little bit of a different path into real estate, but into building that business. So you want to kind of elaborate for people who might not know you as well?
Yeah, absolutely. So I got started into real estate by buying a duplex and living in half of it, doing the house hacking thing. About a year or so into my real estate investing journey, I bought another sixplex property. And I said, hey, this would be fun if I could help other people do the same. I didn't see a lot of agents out there that were doing a great job who were actually investors themselves. They were talking about investing and they wanted to sell you all the investments. They didn't have the insider knowledge of being an investor themselves. So I got my real estate license about a year after I started, and it really took off almost right away. I was rookie of the year in our region. In our state. I was almost rookie of the year in our region, but I only worked with people that wanted to get into investing, and that was almost all house hackers. Had a few newer investors, but it was 90% house hackers. Did that for a while, got really excited to help a lot of people. And as we were talking before we started here, my investing journey slowed down a little bit. At the time, I didn't realize that this real estate agent's business is absolutely a full-time deal, and it takes a lot of time. I was working 60, 80 hours a week, so I didn't have a lot of time left over to go out and find the right investments and put deals together and make it happen. I did a few deals, but between 2016 and 2018, I bought 20 units, and then I didn't buy anything for all of 2019. And it wasn't until the end of 2020, I was also doing very well as a real estate agent. I had all this income coming in, but it's really a job. And I think, and I hate to say this, but a lot of agents talk about their business. I'm building my business. You only have a business where you could leave town for a month and the business would be doing the same or better when you got back. Try leaving town for a month as an agent. It doesn't work.
That's a great point that you hit on. And it was a struggle or a challenge that I faced throughout my career, because what inevitably ended up happening, the thesis for me to get into real estate was that I wanted to be involved in putting together deals, right? That was, and not I'm looking to sell a house and move into my second house, but it was the idea of being involved in maybe repositioning, an asset, maybe, we were doing distressed property and rehabbing and flipping, but I wanted to get involved in deals. And then the allure of the cash flow that being an agent or having a brokerage company kind of clouds or distracts you from what the real focus was, because that fast cash, right? For lack of a better term, kind of makes you look at that immediate gratification rather than building that long-term wealth. I mean, did you see that as, and many agents never catch it. Like what caused you to say, wait a minute, let me stop, and this is taking me off track? Was there a moment, or where did you realize that, I'm not really going after what I set out to go after?
Sure. And I had always continued to be interested in real estate investing. I never took my eye off the ball necessarily, but I started to get to the point where, yes, the money coming in is great, but you have to work for every penny, and you're on 24/7. I got to a point in 2019 where I started to get a little burnt out because, again, I was working 60, 80 hours a week. It was not healthy for relationships. My wife, now girlfriend, and I weren't doing so well at the time. It was hard because I would wake up at 7 o'clock in the morning and I'd be working by 8:30 or 9, and I would work until 10 or 11 o'clock at night every night. And it was almost like a drug for me, where I was just going after it all the time. But I started to get burnt out. I wanted more out of life. And I realized that an extra dollar earned isn't worth as much in the more it takes to get. So if I can get this passive income coming in, or if I can start building wealth in other areas that can give me freedom or allow me optionality, that's going to look a lot better. But again, it took me a little bit to get there. It was 2019. I didn't do any deals. I started getting burnt out towards the end of 2019. 2020, obviously, we all had a little bit of a reset there in early 2020. I had a few months off, or a much more relaxed schedule. But at the end of 2020, what I really learned at that point in time was that I wasn't going to do it on my own. Because I am an agent, because I run a real estate sales business, I can't do everything on my own. And it just happened that a deal came up that I couldn't take down on my own. It was really just served up to me. My property manager hated managing my apartments. He didn't like it. And he was trying to get me to sell apartments and buy single family houses because he liked managing those. So he brought me a package of 7 and thought, oh, I'll get Jordan to buy this package of 7. He'll sell his apartments. I wasn't quite in that mood yet with the apartments. I absolutely am there now. But I said, hey, I'm just going to buy this, but I need somebody to come in and bring more money and help me get the deal done. That's when I partnered with somebody, and we're still partners today, and it's working very well. And that's helped me scale up the business because he's more of the operations mind, keeping track of all the finances, making sure all the little tedious details happen. And because I'm an agent, what I do best is go out and find deals. So I'm on the acquisition side. He's more of the operation side.
So something that finding that right partner is so key. But one thing, and I know you had that, and from the conversation, you had bought real estate prior to becoming an agent or getting your license. One thing that I've found, because I used to even teach the salesperson course, right? And I would speak to new people who wanted to get into the business. And it would always be, before I started, I would always ask people, like, what's your motivation? Like, what's the reason you're entering into real estate? And I think, if you don't have a network and you don't have capital behind you, I think coming in as a real estate agent is a great way to learn, to network, and to give you a conversation starter, to find access to deals, opportunities, or people that could assist you moving forward. And so you always get this probably 5 buckets of why people say they wanted to get involved. I mean, the first one was people saying they wanted to try it, which always drove me crazy, right? And well, and we in my market here, it's a very civil service market, so we have a lot of police officers, firemen, maybe retired, and there'd always be one in the class. And so I would always, ultimately, when we get that, where I want to try it, I'd always pivot to them and say, "Hey, how would you feel if you were on patrol and the guy next to you said he wanted to try being a police officer?" And that always, elicited a response where they get nervous, right? So I thought that's how I feel when somebody says they want to try real estate. The second thing was the second most common answer is when people would say, "Hey, I want to invest," right? I think I want to invest in real estate. And then ultimately, a lot of those agents never invest. And when you go back to them and you'd have that conversation, they could, in their mind, say, "Well, if I sold the deal to Jordan and then Jordan relisted that property with me, I'm in, quote unquote, I'm involved in the deal without taking that risk," right? That they would mentally feel like they were part of that transaction without actually having to have that risk involved in that transaction. So here you are, right? You're riskless transaction but it's a job, right? Getting a fee for performance, but now you still wanted to go back and to that ownership where you were taking the risk. And was that really about the time freedom? Was that the biggest motivating factor there that you had? Was it, if I get this right, or was it, I really want to build up that balance sheet? Like I got a good income statement, but to your point, if I step away, that income statement dissipates, and I really need to grow that balance sheet.
Because of books like Rich Dad, Poor Dad, and Cash Flow Quadrant, understanding that if all you have is, if you're self-employed, it's a job just the same. It's different than a W-2 job. You have a little more flexibility, but it's a job. You need to work for money. I always understood I wanted to build assets and build net worth. So absolutely, I wanted to build up my balance sheet. And I think for a long time, that's what I focused on, is how do I build the balance sheet? How do I get the best returns? Rather than how do I get cash flow that's going to give me the actual time freedom. And that's why my investing before mobile home parks, we were all doing BRRRR, and the BRRRR strategy works very well for building your net worth. So we're about to do a refinance on all the BRRRRs we still own and pull out a bunch of cash. We're still going to be at 55% LTV on them. We're still going to be cash flowing on them. So we built a ton of net worth, but they never cash flowed very well. And if I would have had a better lens or a better investment thesis from the very beginning, I probably would have just gone not straight to mobile home parks, but I probably would have invested for cash flow from the get-go. I got caught up in spreadsheet math for a long time. So I'm sitting there and I'm building up this portfolio. And I built up a pretty good portfolio very quickly, but it wasn't spitting off any cash flow. And that wasn't giving me what I was actually looking for, which was time freedom and optionality. I think as a real estate agent, it's really helpful to say, hey, if this client is driving me nuts, I don't want to work with them anymore. Or I want to work on the projects that I want to work on and work with the people that I want to work with. But when you don't have any sort of passive income or ability to say, hey, this person just isn't the right fit for me, you end up in a tough spot and you feel like you need to take everything. I think you could make the argument that you don't need to take everything, but it just feels that way. So for a long time, I just built net worth, and I built a good net worth doing it. But my cash flow was sad, to say the least. And it's in the last couple of years, it's been more about, as I've aged a little bit too. So we're about to have our first kid here. I'm married, ready to have the ability to not have to be working all the time. And I've just shifted more towards, I want cash flow. And any of the investments that I make in the last few years have been focused on cash flow. But no matter what you're doing as an agent, investing has so many benefits. And I think that making just investments that are what people call them equity plays or building net worth is not the wrong thing to do, because you can convert that into cash at some point in time with a refinance or a sale.
And I've heard you say elsewhere, not here, that one of your biggest regrets was not doing bigger deals earlier,
Yeah.
right?
Hmm.
Why does that bite you? Like, why does that bother you?
A couple reasons, but doing the bigger deals now, I understand that they're really not that more complicated. And bigger for me is in the, let's say, 30 to 50 lot range. We're buying mobile home parks now. It's not any harder to do. It's actually easier in a lot of ways because you can bring on more help. We've got VA staff helping us. I've got partners. All the smaller deals, I had to be involved in every aspect of it. But the bigger you get and the more you're able to bring on partners, the less you really have to do. And the more you can grow your net worth too. So, but at the same time, early on, probably 2016, 2017, I met some guys that were syndicating apartments. A good buddy of mine, they've got about 3,000 units right now. He's completely financially free. He's in a really good spot. And we met when he had under 100 units in 2016, 2017. And I went to all these conferences with him. I went to the Best Ever conference. I went to Bigger Pockets, all the big conferences where people are talking about doing bigger deals. And everybody's telling me, hey, bigger deals are no more work than smaller deals. And I'm hearing this, but I'm not internalizing it. So I just sat there and heard this and continued to buy duplexes, sixplexes, single family, all this stuff until 2023 when we bought our first mobile home park. And we have made this mobile home park, mind you, we bought with 4 partners. It's a 32 lot park with 4 partners. It has made more cash flow for me the last couple of years than all those single families that we bought. And we did 41 BRRRR deals. All those single families that we bought, and then probably all those sixplexes I bought in the early past too. So I think it was a fear or something was keeping me from doing those bigger deals or just not internalizing this. I'm a slow learner, I guess you could say. And now that I know what I need to do, I'm looking at a multi-hundred unit deal right now that I would partner with a bigger group on, but I just got past that block here more recently in the past few years.
And what's great about that, Jordan, when I hear that, it's not a capital shift that you talked about. It's not that, hey, I had this a windfall of capital, and now that it allowed me to step into a bigger deal, but it was more of a mindset shift.
Absolutely.
Right? And a lot of, I think, to be successful, whether it's in entrepreneurship and in real estate, in what you're looking at, it's really about having that mindset of, this is where I'm focused on, right? And now you will create the scenarios that for you to be successful in that, right? So it's looking at maybe a bigger goal or a bigger picture above that horizon to focus on really where, once I know where I need to go, trusting that I'll find the map and the pathway to get there.
Yeah, and believing that you're the type of person that can do deals like that. So, if you get in the mindset that, hey, I'm a restaurant worker and all my family is a restaurant worker, and this is the type of person I am. We never have any money. I hear this exact language. Oh, we're just the type of people that don't have money. That's your mindset, and that's where you've placed yourself, and that's what you're going to stay stuck as. But if you move and say, oh, I'm the type of person, and I don't want to sound too airy-fairy, but you have to place yourself in the mindset that I am the type of person that does deals. I buy real estate. I have a surplus of income. I have passive income. I'm able to do these deals. And you just keep training yourself, and it takes some time, I think, but keep training yourself mentally. Maybe visualization. Everybody has something different that works for them to get there, but reading books, podcasts, hanging around groups, going to meetups, that kind of stuff just gets you more in that mindset. Hey, I am a real estate investor, and this is what I'm going to do.
I think that's a great point, because your words become your limiting belief, right?
Yeah.
So you put that you put that parameter around yourself, and once you limit yourself, you're going to get what you ask for one way. Right? I think it was Henry Ford that said it.
Yeah.
Whether you can do it or you don't, right? You're right either way, right? So,
Yep.
um, but I also believe that that evolution you had was for a reason. So, in doing those smaller deals now, what did you take out of that you've now looked at in your investment, in your investment thesis? Where did you take, what was the discipline you took from doing those, well, we'll call them smaller deals, which if anyone who's done a renovation of a single family or a duplex, I mean, they're not small. There's a lot of things that you have to do and do right. Right. So I'm not trying to minimize that, because I've done that spec work, and it is a full-time, full out, all out job. And very high velocity. I mean, you have to be an adrenaline junkie to do it really well. Like, you have to, be at it, make sure everybody's on site early, getting that job done, hitting deadlines. But what did you take out of that? What discipline did you take out of that you use going forward?
So I guess just starting from the beginning of how I look at finding deals is just what it takes for acquisitions, how you need to get out there and find deals. You need to make the phone calls. You need to make the outreach, whether you're talking to brokers, whether you're talking to sellers, whether you're putting together a direct mail campaign, just all the pieces that you need to put together with the persistency and the time it takes. Because how our brains work is, we want immediate gratification, and maybe this is a sign of the times, but if we don't get a feedback from something we're doing right away, it's easy to not think that it's working. You're thinking, oh, this isn't working so well. But just having the discipline to stay with the acquisitions funnel until something comes from it, because it always will come. If you stay with it and stay disciplined and stay focused, at some point in time, you'll get what you're looking for, as long as you're looking for the right thing. But that's the biggest piece for me. There's a lot of other parts.
Yeah. So for me, I think when, we were speccing at one point, 30 houses a year in our market, which was the velocity in New York City, a little different. But one thing it helped that I know that I take forward was the coordination. When you were speccing one or two houses, or three houses at a time, during the course of the year, then it was almost like, that HGTV show, Flip This House. Let's go in. Let's, what's the design? What are we doing? How do we make this house really? But when you start moving at that larger scale, it was more of, hey, let's get our team. This is going to be the standard in each home that we do. This is the look. This is the feel. When we're ordering, we knew what the pipeline was, so this way we could order in bulk, so we could drive down costs, and it helped along the way as we started to scale into different asset classes. Like, hey, this is more of the way we need to look at it to drive down costs and efficiencies and to be better. So I always looked at it, because I've had those same conversations with myself, and that, like, why didn't I start buying more parks sooner? But I realized that there's probably some things I needed to learn first, right? So I got that knowledge base, and now I'm able to add to what I'm doing today.
Yeah, I truly believe that. And, back to the systems and processes, all the Burr properties we did look exactly the same. They've got the same cabinets, the same paint, the same countertops, same floors, everything. So we had a system. We were cranking them out, and, that's how we made it happen. We do the same with the mobile home parks now. We have the same sign we order. We have the same, all these different processes look exactly the same for when we take over a mobile home park. And we're building that out more as we go. Only been on our fourth park, but it's easy to see. It's easy to think, oh, I want to be like that HGTV guy and go in and pick out everything. That takes so much time and energy to do that. If you have the system, and if you have the training wheels that you've done this with single family houses, and you moved up to duplexes and maybe 8 plexes, and now you're able to buy 40 units, like it's nothing. I do believe that. I wish I would have gone bigger sooner, but only because I had done a lot of that work to get started. early on, and it waited too long.
But now, so here you are, right? You have a knowledge base in real estate, right? So you're not a novice by any stretch of the imagination. You've got a successful team, right? That you're running on the sales side. You've got a portfolio of single family homes. You've done some multifamily, and you decide to make the leap into MHP, right?
Mm-hmm.
So, what is the thought process of that to say, all right, now I have success. It's not like that you're finding your way into this by accident, but you're having success in other avenues, right? Why decide to go into MHP when obviously, Jordan, you have the ability to go and pivot into other asset classes, or to dive deeper into where you are currently?
Mm-hmm. Yeah, that's a good question. So I think in the beginning, I always wanted to get into bigger multifamily. Um, Unfortunately for me, or fortunately for me, I guess you could look at it both ways. By the time I started getting ready to get into the bigger multifamily, so was everybody else. And I'd already had the experience of owning smaller multifamily and saw all the disadvantages of multifamily property. At the same time, I saw all the advantages too. When I took the mobile home park boot camp in 2019, it really resonated with me because I'd already dealt with all the tenants and toilets and repairs and maintenance and all the issues that kill your cash flow on multifamily. And I said, this sounds great. If I can find a way to get into mobile home parks where I don't own any of the homes, that's the way to go. And we know as mobile home park operators that you end up owning some of the homes, unfortunately, and it just happens. But we work to get rid of as many as we possibly can and take a lot of that off our plate. But what got me into it was just thinking, how can I scale up my portfolio and how can I get that cash flow that I probably should have been looking for earlier on? Mobile home parks just seem like the best way to go. And yeah, I think everything's great, multifamily, industrial, whatever you want to do. But I truly believe that you need to pick something that you're passionate about, that you like, and you stick with it. And just say, I'm going to be a mobile home park guy, or I'm going to be an industrial guy, and you're going to go all in.
But the thesis, right, is that mobile home park investing is passive. But that's the thesis, and I think that that draws people into the space, right? People own the homes. I don't own to your point, I don't own the toilets, so it's passive income. But I had this conversation with an investor that I work with, and as we're describing and going through our process, and he knows what we're doing, he's like, you're not an asset manager. He goes, you're an opco that also manages the asset, right? Mm-hmm. What was the biggest shift that you saw from, hey, I was in multi, I know what I didn't want, and then I get into MHP? Is it just passive for you, or is it like running an opco inside of, running a business? You're essentially running a business in one of these parks.
No, you absolutely are running a business. And I think that you're really fooling yourself if you think it's going to be passive, or you're going to have a really bad time and your investments are not going to do well. We own, or I own, a property management company that manages our parks. So we have VA staff, we have the staff working in the property management company, we have community managers on the parks. The staff keeps track of the community managers and make sure everything's running well. It is a business, but like any business, if you set it up right, it's not you running around like a chicken with your head cut off. You've got systems and processes and staff and policies and procedures that make sure that things are getting done right. And absolutely, I keep track of what the staff is doing. Absolutely, I get emails every day with what's going on at the management company. But I started with that in mind. I took the boot camp. I understood what good management looked like. And I started with in mind, hey, I'm going to have to build a property management company. We actually
What does good management look like to you?
Good management to me, holding everybody accountable, collecting rents on time, providing great service for tenants. I think it's not just about the cash flow and it's not about the income, but how are you treating the people in your communities? Because these are people that, they have the same hopes and dreams as all of us. They want to have a good life for their kids. They want to have a nice home to live in. They want to live in a nice, safe, clean community. I want to provide that for everybody. I'm not in this just to make money. Why can we not make money and provide great housing at the same time? I truly believe that. I think a lot of mobile home park operators feel the exact same way. I think things are just going to go well when you treat people right, when you help them have great communities. And then when you go to do that rent raise, when everything's looking good and when the community's going well and it's much better than the last owner had it, you're not going to get any pushback on the rent raise because you're doing a fair rent raise and you're taking great care of the community. You're providing great customer service. So I do try to provide great customer service with our property management company. I want the tenants to feel heard. I want them to feel understood, but I want them to also understand that, hey, we're going to treat you fairly, but we have rules here and you have to follow them.
You,
Rent is due on time or you're paying your late fees type deal.
and that's a great point, because I think one of one of the things that going into the space that we were told, or we found out, through my research, the average resident would stay 17 and a half years if they own their homes. And like the commentary was, people own their homes, they're kind of tethered to the ground, and that's why they stay. And why you go into a park that had a lot of deferred maintenance or deferred capital improvements, or that was substandard with bad roads, maybe bad infrastructure, and other things that are happening. And you'd say, well, they're staying there because they can't move.
Mm-hmm.
And then you've seen, especially in the last few years, because there has been a lot of new operators came into the space, when people took over a community and they raise rents, people would leave. They would find the money to leave.
Yeah.
And I think the difference that people miss, and I think you hit on it, and for us, we define it as, you have to make sure that you elevate the people stayed because they felt a sense of community, right? So the owner, the legacy owner, maybe they weren't running the park right, but they felt that they knew the owner, and having that connection, right, allowed them to, because that was their community, and the owner they would know them, the owner would know their issues, and they had that relationship, they would stay, right? And they would look beyond maybe some of the things that we might look at coming in. It's like, wow, how do you stay here? So for us, it's making sure that we're intentional and building that culture, right? And you mentioned accountability, letting the residents know what you're going to do, how you're going to how these impacts are set up to derive value to them, right, or for them. And I think in doing that and creating that culture, people will inevitably want to stay. And you only do that by creating win-win situations, right? It has to work for them. It has to work for our stakeholders. It has to work for us. So and that makes everything go round. And I don't think people mind, to your point, those rent bumps, if they feel there's a perceived value that they're getting back for them, whether it's you're helping them with their underpinning, they're skirting their homes, the community's cleaned up, the roads are paved, they've got a new parking pad. People realize that that stuff doesn't fall from the trees, but it has to happen because there's an investment being made, and then that might reflect in getting closer to market, right? Like if you're 40-50% below market because the current owner hasn't raised rents in 20 years, well, that's why your roads look that way, and that's why your infrastructure is failing, and that's why you have certain things that you have. But if that gets cleaned up, we've got to figure out a way to make this attractive and make this more viable. So you're 4 parks in now. Like, what was the biggest? And I think almost that first park, you get in there, you kind of got the excitement of buying that first park, right, becomes exciting. You're there, I always think it's that second one, like where you're digging in, right? So that
Mhm.
second community you purchased, you said, all right, I think I got this. But that second one always is the one that to me is always like a little shocking. Like something comes up like, wow, I didn't realize that like on the second go around. Like you think you mastered it on the first one, but that so what did you learn there? Like why did you dig deeper at that point?
So we learned a lot on our second park. Our first park, so we bought a two-package portfolio. They were fully occupied, city water, city sewer, great school district. There was nothing to do almost. We just cleaned it up a little bit. We did a little cosmetic repair. The second park, um, it needed infill. There was some boundary disputes with the neighbors, who we are now good friends with, actually. There was all sorts of stuff going on with the second park that it's where the value is going to come from. It's getting the boundary dispute taken care of. It's bringing in homes. It's filling lots. That's where the values come from in this second park, and that's where we really started to learn. Infill is not easy. I think it's not hard, but it's a much more involved process than it sounds like. Oh, you're just bringing a home in and setting it up. There's a lot of pieces to that, and finding the homes, getting the licenses, that kind of stuff is a little harder than it sounds. Because oh, we can just go buy a new home from Clayton Homes and bring it in, and you can, but without the right license, you got to pay a lot of money, and can't use the cash program, and you need to go find homes on Facebook Marketplace, find somebody to bring the home in, make sure the home is set up, make sure the home is skirted, make sure all the utilities are connected, make sure the home is fixed up and taken care of. And we continue to learn even today. We
And
brought
and
our
then
first
and then you and then you have to sell it,
to sell it. Yeah. Yeah,
right?
then you have to sell it. But we were so naive bringing in those first used homes because this park is in Kentucky. Kentucky is very challenging to get a license in, a retailer's license. So we really were relegated to bringing in used homes. You also can only sell one home a year for a profit. So we figured out, okay, we're not going to make any money, and that's fine. We just want to fill these lots, but we're bringing in used homes. The sewer is a little messed up. Maybe the electric box is a little messed up. And oh wait, we actually need to rehab the home too. We didn't think about that. We thought we'd just bring in a used home, it would be ready to go. Not really. Not the used homes we're finding. They need some work. So finding the right people to put skirting on them, finding the right people to rehab the homes, holding those people accountable, getting that work done. And then, Frank, to your point, getting good pictures taken and getting the home ready for sale, getting the home sold. It's a much more in-depth process than just bringing a home in and you've got a new home on a lot and it's sold.
That's a great point, Jordan, because we do a tremendous amount of infill. Infill is I think the hardest or the most challenging part of the entire business, right? Because it's
Mhm.
essentially there's the logistics operation part of it of getting that home in, sourcing it, getting it set, getting it approved, getting it inspected, getting it lined up and ready to go. And then there's the sales portion of it, which is cultivating the leads, making sure you have the follow up, making sure that sales process is being followed through each and every time with more than one person touching that prospect, right? Because
Mhm.
you can't just rely on your manager, or we don't believe you can't just say, well, there's an affordability issue. I'm going to put it on Facebook Marketplace and someone's going to buy that home. The process is a little bit different, especially if you're selling newer homes to people. So do you think the fact that you had or have experience running from the sales side of it, you have a sales engine that you've already created, right?
Mhm.
Like you have that experience as a real estate building a successful real estate team. Do you think that gives you a competitive edge when you're marketing your properties for sale, that you're attacking it from a different angle that other operators probably are not?
Yeah, and I think it makes it not seem such a daunting process. I actually kind of like infill. It might be a sick thing to say, but for me, I see that it's something I already know how to do, and it's a way to add so much value. So yes, it is something I've done a lot of. Yes, I've managed sales teams, but it's like I forgot that in the very beginning when we started bringing in homes, why I thought that we could just bring in used homes that weren't in good shape and sell them without making them look good, without having great pictures, without having a great listing out there. It was so silly. And I've recognized that and remember that now. Or we'll do things like we'll virtually stage homes. So we'll go on, we'll get virtual staging done in the homes. It's super cheap. You get good photos, you get good virtual staging. The home looks great, and it's going to sell much quicker, especially when you're selling something that's not super desirable, like a 2-bed, 1-bath home, one of the smaller homes. That virtual staging helps people understand how they could live in the home. So yeah, I think that has given me an edge because it just gives me an idea, and I like selling property. I much more prefer to sell property when it's our own property and it's going to add to the balance sheet and add to cash flow.
Yeah, and one of the things that we constantly drill in with our sales team, right, and go over, the home is the home, right?
Mhm.
It could be a 3-bedroom, 2-bath, 16 by 66, right? And so that same home might be in a community down the road, right? So if you're just selling the home, that's not, people don't buy the product, they buy the benefit. And what's the biggest benefit, right? The biggest benefit is you're going to live in this community that you have ownership that cares, you have a culture that's being built, you have capital that's being invested, and we're looking to drive value so you know that you're living in a spot that's safe, clean, secure, and with ownership that's always looking a way to enhance that resident experience. So remember what that benefit is. It's not just the 3-bedroom, 2-bath home. I mean, that's key, right? That's it's got to be clean, safe, right? But it's where that home is located, right? Real estate's all about location, location, location. And, remember the community benefit, which goes back to your point earlier of how you're looking to build that community. That is such an important part to let the prospect know why they're choosing to live in your community, right? It's the community. It's not just a home there. And I think by doing that and reframing the question, that's helped drive our sales velocity, our lot activation velocity, because that to us is the benefit of buying a home in one of our communities. It's not just a home, right? Home is great, but it's the community itself that we try to focus in and drive in on.
Absolutely. And with the management company too, and they get that warm fuzzy feeling from the sales team and can get that same from the management company. They understand they need to live here for years, so they're buying a home. I think that makes a lot of difference.
So Jordan, share with us like what's next on the horizon. Like you're now, correct me if I'm wrong, you're 4 communities in, right?
Mhm.
You've gotten over that hump. Is it, where do you see you're taking this business to?
Absolutely. So our goal this year is we're at 106 lots. We'd like to buy another 100 lots. And how we're going to be able to do that is, yes, people do want to see you have a track record before they'll do deals with you, especially some of the bigger deals. They want to understand that you can get a deal done, even if you're talking to a seller. If you're cold calling a seller and they know you're a park owner, you have a much better chance of getting a warmer reception than if you're just cold calling a seller and they think maybe you're a wholesaler or somebody is trying to do their first deal and it's going to waste a bunch of their time. So we would like to buy another 100 lots this year. We're refinancing all of our previous Burr properties as we speak to get a lot of cash to do that. We're going to sell one park, probably try to trade it up. Our second park we bought is 25 lots. So it's a little on the smaller end. Nothing wrong with 25 lot parks, but I think we've almost completed the value add. We've almost completed the infill. So we won't have any more way to increase value except by raise rents. So we will sell one this year. But yeah, we're just going to keep growing. And at this point in time, the goal is not to syndicate a bunch of deals or raise a lot of money to do deals, but to strategically do JVs with friends and other investors that I know and just continue to grow the portfolio. But for me, it's always been about how am I going to build net worth and build cash flow for ourselves. So I don't want to build a huge business around this at this point in time. I want to continue to build cash flow that allows us to live the life we want to live.
Great. And right now you're looking in Texas and in Kentucky?
Yeah, we try to stay within a radius of where our parks already are. So within about 4 hours of Texas, Kentucky. And I would buy up in the upper Midwest. My wife's family's from there. We're up there every summer. So, Iowa, Minnesota, South Dakota, that kind of area where I could still keep an eye on a park twice a year, maybe.
So if somebody has a deal in that location in the Kentucky, I know you're in Corpus Christi area, Texas. You're in, you said Paducah, Kentucky. Is that correct?
So we're in Owensboro and Louisville. So
Louisville.
More up northern Kentucky.
Or they have a deal in one of these other areas. Where would they be able to reach you to reach out and say, hey, Jordan, here's my deal. Here's what we're looking at. Maybe there's a way for us to go forward on that.
Yeah, absolutely. I think email is probably the best way. Email, you can find me online. If you Google Jordan Moorhead, I'll pop up Instagram, Facebook, LinkedIn. But you can email me at jordan.moorhead@kw.com. And that's for KW for Keller Williams.
Well, Jordan, this has been, I loved hearing about your journey. I think it's to see the evolution, and especially from real estate agent, investor, from single family homes to multifamily to now manufactured housing, and you've killed it everywhere else. So I'm sure we're going to hear a lot more about you and your journeys in the manufactured housing space. Appreciate you being on today and sharing that story with you. And for anybody out there listening, I'm going to ask one favor, one question, actually. Would you help someone who you don't know learn how to find, fund, or manage their next real estate deal? And if the answer is yes, then I'm going to ask you to do me a favor on the streaming platform that you're listening to, rate this episode. And if you give a rating to us and then share that rating at the MHPExchange.com, we're going to send you a copy of our after site visit report. It's the same after site visit report that our team uses to make sure that we're meeting our objectives, that we're moving forward on our business plan, and everybody's staying on path. And we're going to do that because by you sharing that rating, it allows us to get up in the algorithms and share this episode with more people. So this has been another episode of the Mobile Home Park Exchange podcast. This is Frank Rizzo. Thank you very much, Jordan. Until next time, everyone, happy investing.